Okay guys, Bruce back here. Sorry I was a little late. I was expecting this a little bit later and it came out. And I thought I would get this to my subscribers and everybody that's been supporting me. So let me quickly just run through the payouts on all the YIELDMAX, the 19 or 20 single stock funds that declared today. So here we go. Tesla for Tesla is paying 69 cents. Okay, that's a distribution annualized rate of 52.76, right? All of these are declared today. All of these are paid on May 8th. You must buy these funds by today, okay? If you buy them on Monday, you will not get the dividend, okay? You must buy them today, 5/3. Okay, so I'm just going to go through this fairly quickly. I'm going to elaborate on the three that I cover, or two of the three, because YBIT is new and doesn't have a distribution. The ARK fund, been a poor performer for quite a bit here, 52 cents. Okay. So remember, all these are similar price. They all started at $20 and they've moved up and down in their NAV price. Apple, which by the way, there's a bear Apple ETF coming called Rotten. This isn't a joke. It sounds kind of funny, but ROTN will be the symbol. We don't know exactly when it'll be released, but that'll be a bearish Apple, right? So it depends on how you feel about the market. Maybe you trade in and out, own one for a while, own both. I mean, Apple did amount some massive billions of dollars of buyback, but I feel like the NASDAQ, as I've said to people, is going to roll over a little more this year. We'll see. So NVIDIA paid $1.19, right? I think it paid 2 something before. So let's move through them. Amazon. I like Amazon. I like what Amazon is doing. They're doing a lot of layoffs, but they're carefully watching their expenses. I don't own any. That has a 97. So you guys can read these. Meta, right? The old Facebook, 89 cents. So when you see the ones that I'm covering, you see bigger payouts, right? Because I'm bullish on the underlying. Google, 66 cents. Netflix, 96 cents. Coin, I'm disappointed in the 228. I'll be honest, right? I think, but YIELDMAX does look at these IVs and they overpaid us on Misty, I think, right? They paid us more on Misty than I thought Misty earned, but they like to keep, Misty's one of the highest IVs. So Microsoft, 57 cents. Disney, 70 cents. ExxonMobil, 33 cents. Again, I'm telling you what the underlying is, right? There's Zomo, there's Disso, you know, all these names on the left are the ETF symbol, but the underlying asset, right? Coney has Coinbase or Coin. MSO, FO has Microsoft. Disso has Disney. Zomo has ExxonMobil. JPMO has JPM, 41 cents, right? AMD for AMD, 51 cents. PayPal, 94 cents, not a good payout. Squee, the old Square, right? The payment system, Block, $1.11, call it $1.12, it's so close. Murni, a pharmaceutical, right? 94 cents. This fund has been getting killed, the AI, Option Income Strategy Fund. I don't know what the NAV is, but it isn't good. Look at this, 252, okay? I would have thought those would be reversed. I would have thought Coney would have paid 252 and Misty would have paid somewhere a little over $2. So I think they want to keep that yield up because they didn't really earn it. YBIT, which I'm covering based on BITO, or really Bitcoin through BITO, wouldn't pay, and neither is Crash, the brand new fund. So Hit me up with questions if you have them. Again, a couple people have asked me about NVIDIA. There is a forthcoming bear fund called DIPS, DIPS, that will be released, but we can't know the date. They'll release it when they feel like it. Again, I'm a little concerned with some of the NASDAQ high flyers, right? I think they may bounce for a while, and we could bounce for a few months, but overall in a 3 to 6 month, I'm not bullish on a lot of these stocks. So, and I will cover some that I don't own, but I'm just telling you my 2 cents. So again, all of these you must buy today if you want to buy more, right? You must buy today. If you buy Monday, you don't get the distribution. Now, as a general final reminder, and I'll let you guys go, all of these funds, when they open, okay, Monday morning, they will open at the minus amount that they're paying. So look at AMZ. So AMZ is paying 97.9726, almost $1. They will look at what they closed at on Friday, May 3rd, and they will subtract that amount for the planned open. But that's only on the open, right? They're going to then start trading. It can go up or down, but they take that out, right? Because it's loss of capital. It was money that the fund had in their assets that creates the NAV value. So that's why a lot of people say it's hard to get a 200 or 300% gain in one of these ETFs if you look at only NAV value, the price of the fund, because they're paying out. I mean, look at Coney and look at Misty. They're going to pay you typically 100% of what you paid for the stock. Now, depend on when you got in the fund, right? If you bought Misty at 45, you might not get, you know, that full amount. But if you bought it at 30 or 27, you'll probably collect all that in a year's worth. So that's what you have to keep in mind, right? But a lot of people want dividend income. Again, if you want to buy Coinbase or MicroStrategy and the stocks are really running up 500%, you're going to make more money by owning the underlying if you're really, really bullish. But you're going to get distributions and a NAV increase if you own these guys. So I always call that money dividend and your NAV. Okay, whether it's plus or minus on the NAV, of course it's plus on the dividend. They're never taking money away. You add those two components together and calculate your total return. So Pat, one of my loyal subscribers, has asked me, I did a video on how to calculate total return, and I added that so you can download that spreadsheet. Some of you know how to do it, right? Seasoned investors and others. So never look at this and say, hey, I got 80% of my capital return to what I paid for the underlying, but I lost 50% on the NAV price. Okay, well, 80 minus 50, that says you got a 30% annual gain, right? But conversely, if I bought the fund at $20 and at the end of the year it's 25, then I got $5 on 20. So I got a 25% NAV increase along with, let's say I got a 70% distribution yield. So now I made 95% on my money, you know. And remember, Warren Buffett, the best investors in the world, you know, they're typically happy with a 15 to 20% annual yield, right? Because it compounds. Everybody, I hope you guys know the rule of 72. Divide 72 by the interest rate, right? If you divide it by 7.2, it's going to take you 10 years to double your money. So anyway, that's all I got. Sorry to just throw all this at you, but I wanted to get this video out. All right, bye. Catch ya. Have a good one.